Hi there, I'm Doug Reiling with Centennial Tax Accounting, and this is my 2 cents on the Corporate Transparency Act's Beneficial Ownership Information Provisions, or CTA BOI, as we like to say it around the office, since it's kind of a mouthful. The CTA was actually signed into law way back in 2001 as part of the National Defense Act for that year to help combat money laundering and terrorism financing. The new BOI provisions of this law just went into effect as of January 1st, 2024, and we expect many of our clients to be impacted by it. Now, before I dive into what all that means, I just want to take a moment to say, I am not a lawyer and I can't give you legal advice. This video is just meant to provide general information which we hope will prompt and prepare our clients to have discussions with their attorneys about how to comply with this law. Beyond the general information provided here, Centennial Tax and Accounting will not be able to advise you on how to comply with this law or file any reports related to it on your behalf. Again, this is lawyer stuff. Now, getting back into it, the thing that we think many of our clients may not know is that this law requires them to file reports with the Financial Crimes Enforcement Network, or FINCEN, as we affectionately call them around the office. For those of you that own foreign financial assets and already file reports regarding those with FINCEN, this report should not be confused with that one. They're separate things. Likewise, we're not talking about income taxes, payroll taxes, or sales taxes here. And finally, this is not another report you file with the Secretary of State, like your annual report or your biennial report. This is all new. So who needs to file? Well, pretty much anyone that conducts business through a separate legal entity, either domestically or overseas, should assume that they need to file unless they can find a specific exemption under the law. Now, for our clients, we expect this to impact pretty much all of our corporations, LLCs, and trusts. So what do you have to report, Doug? Well, you'll need to provide FINCEN with information on your entity, such as legal name, address, and tax ID number. You'll also need to provide information on each of your beneficial owners. The definition of beneficial owner is complicated, and we'd encourage you to seek legal advice on that. But in general, if you own the place, you probably are one, and you'll need to provide your name, date of birth, address, tax ID number, and a copy of some kind of identifying document, such as an ID or a passport. So when does this need to be done? We're going to take this one at a time, as FINCEN has provided some extensions. If your business existed before January 1st, 2024, then you have until January 1st, 2025 to file an initial report. If your business was formed after January 1st, 2024, but before January 1st, 2025, you have 90 days to file your initial report from the time that you created the business. If your business is formed after January 1st, 2025, you'll have 30 days to file your initial report after you start the business. Remember, the beneficial owners of your entity, should they ever change, need to have an updated report filed on their behalf with FINCEN, generally in 30 days. Now, the good news is that this filing can be completed online at fincen.gov/BOI, and they've got lots of good resources about the reports available right there on the website. The bad news is that failure to file can result in criminal and civil penalties of $500 a day up to $10,000, and maybe even a couple of years in jail if they figure out you did it on purpose. So again, this is serious business, and if you have any questions or concerns, we'd advise you to reach out to your attorney as soon as possible for assistance. With all that said, I'm Doug Reiling, and that's my 2 cents on the CTA BOI.